So what does it look like 7 years after you decide to become your own bank?
I've had more capacity than ever before. This is most savings I've ever had in my own life, but because I basically took the decision to start this. And if I didn't take the decision to start a policy or 3 at this point, time would pass. Sometimes when I'm working, I don't even know what day it is. And, like time flies, things are busy, schedules are busy. You don't put these systems in place to hold yourself accountable. You turn around and you're saying, oh, I should have done something different.
When we think about this, when people take out life insurance, it's usually to protect, to make sure that their lifestyle can remain, make sure that the mortgage gets paid, the bills get paid, the cars get paid, so that they don't have to sell things, right? That's how we normally look at life insurance. But what you just said is to be your own bank, not even for death benefit, starts to change multiple generations of finance for your family.
I know,
that's powerful. So what does it look like 7 years after you decide to become your own bank? That's what we're going to talk about. I'm honored to have Shauna Decker here. And it's an interesting story. 7 years ago, we were in the office and Shauna for years had sat in her office doing what she did, listening to me on the phone with clients talking about solving their problems when it comes to money and using the infinite banking concept to do that. And she heard this call every day over and over and over again through the wall. And then she made the decision, didn't even tell me about it, to go out and open her own policy, start her own private banking system. And that's what I want to dive into. So welcome, Shauna.
Hello. I know I was just looking at my YouTube video that's on your channel and it's already been 4 years old. So I wanted to do a where is she now with her policy? And actually happy to report, still doing infinite banking, love it more than ever. I'm excited to share the things that I've learned and the other things that I'm focusing on through the compounding effect of not only the actual policy, but learning and maintaining and retaining new information. I started another policy since that first video that we've had. That one's probably about 2 years into that seasoning. And then my other 2 original policies, one for me and my daughter, are probably on their 6th or 7th year right now. I do want to make sure that people have the opportunity to see, one thing is getting started to doing infinite banking and another is sticking with it. So I'm happy to share some things that might help people who are just starting out or really interested in the concept, just basically help them take that next step and all the things that I've learned. And if I can do it, anybody can do it, is how I feel.
I love that. And I think an important thing to take note of with being your own bank is a lot of people, they think I got to learn more. I got to get more knowledge, but really it's more of a shift in just your mindset and around how you view money and how you use money. What do you have to say about that?
Yeah, we were talking about this before we get started. I was thinking, because my daughter's in sports and I don't know how to play softball, but she's playing softball. And, if we wouldn't get very far if it's like your parents had to do something in order for you to then do it. Like I was saying, Michael Jordan's mom and dad didn't need to play basketball in order for him to play basketball. So I didn't want us to go into life or with money. Like it's okay if your parents or if you didn't have somebody be an example for you. That doesn't mean you have to disqualify yourself.
And I think a lot of people disqualify themselves financially. They're like, oh, I don't make enough money to do that. Oh, that's only for the wealthy. But that definitely isn't the case. And you've been around this for a long time now. What is your perception on how much money you need to have in order to become your own bank?
It's just about consistency. And something I think of all the time is how much we consistently run literally almost every dollar we ever make through a traditional bank, and we don't even think about it. And so you have effectively ran every single penny from your salary from the time you've been working through a bank, and that's normal. With the policies, there's such a hurdle in just the thought of putting some money into a policy, but really we have been conditioned
You could say brainwashed.
To put all of our money somewhere without thinking about it. And then when we try to do something, healthy for ourselves or good financially for ourselves, it's like there's such a like a barrier we have to break through, being like, should I or shouldn't I? But really, I don't know. That's just like the way I look at it, is we put so much money into a regular bank that does nothing for us. Besides give us the ability to transact, I guess, on a daily basis. Like, that's the trade-off there.
But most people today don't use their bank account as a transaction method. We use credit cards.
Yeah.
So like right there, like there's been a massive shift just in how we use money by the traditional methods. And it went from we use our bank account, then it was debit cards. And now today, I think no matter who's watching this, we all transact using credit cards.
Yeah.
And then we just pay those credit cards off. But who's winning there? Is it us or them?
Them.
Always.
Yeah. I mean, there's ways, that's a good start though, is like, if you learn how to use the credit card game, like, oh, if I'll use these credit cards, I get these kind of points or this kind of leverage, building my credit, and then I pay that off at the end of the month with my bank account. IBC is not much different from there.
That's exactly how you started. If I'm not mistaken, when we did that other video 4 years ago, and when you kind of got into this, it was to pay for your vacations, which prior to that, you would use credit cards with the effort to pay those credit cards off and then, build the points. So you really just shifted just a little bit when you started to become your own bank. And instead of paying your credit cards off using your bank account, you used your own private banking system. You took a loan from that and paid the credit cards off and paid yourself back. Am I correct in thinking that's how you got started?
Yes, absolutely.
Disney World, right?
Mm-hmm. Yep. And what I've loved about the policy 6 or 7 years into it now is that it's that accountability partner. It's the consistency has been my favorite part of being this far into the journey, is putting money aside every quarter. I have 2 policies that are quarterly, and the quarters are just based on when they start. So, one is March, June, whatever the heck the other ones are. And then the next one is just almost 1 month pivoted. So I have 2 months that I pay every quarter, and then I have one that's annual. And what I do is put money aside every paycheck. I put it into my savings account. I'm putting it away to make those payments. So that's another thing that I'd like to share, is just start diverting some of your paycheck into a regular savings account to pay your premiums or to pay your loans. That's been a huge help for me. And even I used to do it manually, doing manual transfers, but with our most recent paycheck, system, you could actually have them do it. There's other things that you can streamline to get yourself set up, which is even just like as much as having your paycheck go into 2 different places.
That is a unique thing. And that's a relatively newer thing. Because I know back, when I was getting paychecks in corporate America, like we couldn't choose anything other than the 401k. But now I know a lot of the payroll companies out there allow you to kind of send part of your paycheck somewhere else. So you could literally send part of your paycheck into a premium deposit within the policy. Mm-hmm. And then you could send part of your paycheck as a loan repayment or recycle and recapture for the loan repayments that you'd be making into the policy. So that just makes everything so much easier.
Yeah. So just through consistency and thinking, and it's almost like putting your mask on first, financially, in the financial airplane there. I've had more capacity than ever before. This is most savings I've ever had in my own life, but because I basically took the decision to start this. And if I didn't take the decision to start a policy, or 3 at this point, time would pass. Sometimes when I'm working, I don't even know what day it is. And, time flies, things are busy, schedules are busy. If you don't put these systems in place to hold yourself accountable, you turn around and you're saying, oh, I should have done something different.
Every single day, your money is losing ground. Inflation is eating your savings. Debt is draining your income. And the financial system, it was never designed to work for you. But there is a way out. And the wealthy have known about it for decades. I'm hosting a free live training where I'll show you exactly how to eliminate debt like the wealthy do, how to preserve and protect your capital from the forces working against it, and how to build a clear step-by-step path toward true financial freedom. No gimmicks, no fluff, just a proven system that puts you back in control of your financial future. Seating is limited and it is completely free, but you need to act now. Click the link below or scan the QR code to reserve your spot today. The wealthy don't wait, neither should you. Now let's get back into the video.
Well, another thing too, Harper, you know, she's almost teenager now?
She is 13.
13, yeah, teen. I actually was thinking about that. I'm like, when do we become teenagers? But duh, when you're 13. So now she's a teenager. So you're 7 years into this. Has anything shifted, like, with how you view your policy?
I love saving for her. Like, it makes me feel great to save for myself and save for another person. That's just been like a amazing fact of life for me that I'm really proud of. And then, you know, cars are coming up soon, and then going to college or whatever she chooses to do in life. And I do feel just great having taken action to do these things. And then the death benefit, I know, is something that we don't really, you know, teach about so much with the infinite banking concept, but that's become very important to me. And, you know, my daughter's an only child. So I always think about the future, and there's like this pressure of like making sure that she's set up okay, because like she won't have, I feel, or at least it's like, and that's probably my mind's like mental state, but I feel like she will have less people to lean on. So how can I like help her have resources? And so the death benefit is super important to me. And we were talking about, you know, traditional whole life serves a really good purpose, which is in the event of an untimely death, your family can maintain their obligations. So the roof over their head, the food at the, like getting food from the grocery store, paying for all the things that they need to do that, you know, I would be doing for her, why I go to work right now, the things that I carry. The fun part about the death benefit is if you live a long, meaningful life and you don't pass away and all those obligations, like you're kind of through the thick of things, you know, Harper's established someday, and then I pass, the death benefit becomes like a guaranteed inheritance that can actually change like the life, right? Rather than maintain the life that you built when she's stable and things, and, you know, so much time has passed, that could be a huge pivotal moment to have that death benefit there.
That's an interesting thought, because when we think about this, you know, when people take out life insurance, it's usually to protect, like to make sure that their lifestyle can remain, you know, make sure that the mortgage gets paid, the bills get paid, the cars get paid, so that they don't have to sell things, right? That's how we normally look at life insurance. But what you just said is very, very true. You get to a certain point where your kids are off, they're successful, they're doing their own, they're gonna make it regardless of the death benefit or not. So when that death benefit does happen, it creates an inheritance that then changes the trajectory of the entire lineage, the trajectory for Harper's kids and Harper's kids' kids and Harper's kids. You know, like now all of a sudden that windfall of money, that death benefit that you started to be your own bank, not even for death benefit, starts to change multiple generations of finance for your family.
I know,
mean, that's powerful.
It's really exciting, and it's kind of crazy to think that something as simple as, like, my policies weren't big, but that it's like a seed. Like a seed is so small, and then it could grow into who knows what. It could be a watermelon. It could be like a sunflower. But it starts out so small, or it could be an oak tree or whatever. That those policies, those decisions I made could have that, and very well might have that effect. Is really exciting. Like to not count yourself out, no matter where you are.
We talk about the reverse pyramid all the time, you know, and let's just start with South Park, where Carmen is like, it's backwards, right? He's talking about the food pyramid, and it's kind of funny because like that was just a cartoon, and we're like, you know, they're just making fun. But then all of a sudden now they've literally proved that the food pyramid was backwards. And it's kind of when we talk about infinite banking concepts and we talk about being your own bank, we always start with the cash value. We start with the living benefits, but we rarely talk about the death benefit. So I think the pyramid's upside down for infinite banking too. I think we should start with the death benefit, start with that legacy protection, because that's what's the average person that doesn't know about infinite banking, they still want to protect their family. So they're thinking about protection first. And they're sending out, you know, stuff online, you know, hey, you know, who do you know that I could work with to get life insurance? You know, who could I get a term policy from, and all these different things. So I often think, what if we went to them and we met them where they're at? met them at the protection level, the legacy level. But then during the conversation, when the mentors are on the call with them, we transition it into, hey, I know we're protecting your family from X, Y, Z, but what if we used some of this cash value to pay off your debt? And then what if we use this to start buying cars? And what if we use this to start using to invest in the stuff that you want to do in the future? So you started with the protection, but you landed with be your own bank. So it's just reversing it. I think about that all the time, and you kind of just hit on that.
Yeah. It's really amazing that you can be making a good decision, and then whether it's a need or an investment or something like, and then you can tap into the cash value for whatever it is that you need. It's an amazing vehicle. And I wish that I could articulate it in a really good way that made other people, hear what it is that they need to hear to move forward with this. Cause it's really a win-win. It's a win if something horrible happens. As a company, we've experienced a few deaths already where, our mentors have to go give the death benefit to their beneficiaries. And in those moments, we feel obviously both horribly sad for that family's loss, but we also feel just like great for being a part of a solution to one of the worst times in their lives.
Yeah, it's a powerful thing. And I've been doing this 23 years. Well, yeah, this month, 23 years this month. And I've delivered a lot of death benefits. And every time I deliver one, it makes me understand why I'm in this industry. Yeah. I know it's great to talk about be your own bank. It's great to talk about the cash value and the return on your money and the tax efficiency of these policies. But like really when the rubber meets the road is when we lose clients. And that check, okay, that death benefit gets paid to their family, and to see the reaction, to see how that's life-changing. And that's when you realize what you're actually doing. Now, I know no one wants to think about that day, but that day happens way too much. And we have thousands of clients. So clearly, just by the law of numbers, we're going to be dealing with more and more and more of that. And as our clients get older, as we get older, it's just going to, I hate to use the word compound, but like those death benefits are going to compound and be paid out more and more. And we're going to see that. So it's great to start with cash value and kind of say, oh, and you get this death benefit. But really, I think the most important thing is the death benefit. And you're starting to come around to that. But you also have this nice nest egg of money that I'm sure you've realized every time you get a statement, it's always more, right?
It's always more. Like I check because it's twofold too. So once you're actually like infinite banking, like you're putting your premium deposits in and you're making loan repayments. So like every time, I'm hitting it from two angles where the cash value is growing on one and I'm repaying a loan. And every time I like log in, I have more money than I either just paid or any of that. And it's just, it seems to almost be, maybe I'm past the efficiency period, but it seems to be moving like very like rapidly, and like it feels gamified at this point. It feels really nice.
Gamified, that's a cool word.
It does.
One of the things that everybody will realize is that what you just said, that you put $1 in, or whatever your premium deposit is, and you have more than what you put in immediately. And go back to what you initially said, what we've all been taught. We get our paycheck, we put it in the bank, and then we pay our bills, right? That's what we've always done. But there's never a situation where you put money in the bank and then you're going to have more money than you put into the bank that can come right back out. Yeah. I mean, never. I mean, some people are like, well, yeah, if I get interest. No. Like you put money in, you take money out, and then the next year, even though you took the money out, you have more money in there. So that's the uninterrupted compounding interest, because you're not using your own money in the policies. The insurance company is lending you money from their general account. You're effectively using your death benefit while you're living. And because of that, the compounding continues. That's why it feels like it's just rapidly going, becoming more and more and more, because it is. And it's just mathematics, but it's mathematics in something that Albert Einstein said, compound interest is the eighth wonder of the world, the most powerful thing in the financial world. And you summed that up.
Yeah. It's been life-changing, just like working here, going to the events, like whether it's a virtual event, a weekly webinar, one of the private money club events, like everything I've heard and learned over the last however many years has been super life-changing. Even if I hear the same thing over and over, it's been very beneficial to me and my subconscious, because I think about that too. I hope that people who are watching your videos or attending a webinar, I hope that just like a word of encouragement is don't ever count yourself out. Don't ever think that this is too hard to learn. I like to think that my brain will connect the dots, when I'm asleep, figure it out for me.
So you've been around the campfire for longer than anybody because you were the very first person me and Larissa ever hired. If I'm not mistaken, it was back when we had the TV show and you basically just reached out to my wife and that's where you got started. So you've been here from the day when we had no clients to now we have thousands of clients, and you've seen that whole thing happen. But the other thing you've seen is you've seen that a lot of the people we help, these aren't people of means. These aren't people that have millions of dollars or even hundreds of thousands or even in some cases thousands. Some of these people are just people that learned something, they saw a path, and they're just changing where their savings goes. And that savings might be a few $100. Like, what do you see when you're dealing with it? Because you've been around all these clients. Like, how has it helped them?
I think it's been amazing. I learn a lot through our clients. So the community is really great. There's a lot of sharing of, I'm doing this strategy or this, that, or the other thing. And I've said recently, it's the community here with Infinite Banking. It's not like a keeping up with the Joneses type of a thing. You don't have to feel like, oh, I'm not doing a big enough policy or whatever. Everyone's very encouraging. Like, any amount is a great amount to get started with. My first policy was, I think it was $5,700 for the whole year. I think that's $450 a month or something like that. You don't have to do huge policies in order to change how you're diverting your money, or that alone is me putting money aside that I wouldn't have without like that accountability partner. I know that it looks like it's a bill, but it's really a reminder of saying, hey, it's time to put this money aside for yourself. And I like to say I'm just a regular person. I don't think that any experience has ever been a lost experience, but I worked at, pizzerias, Macy's, Lowe's, hair salon. Like, I went to community college, nothing crazy. And I love how much I love IBC and how well I'm doing with money, like, despite all of the normal things I've been a part of. I don't have to be anything extraordinary to live an extraordinary life.
Oh, I love that.
Yeah.
How many times have you heard our clients complain about the infinite banking concept and what we teach?
Not really at all. And that's like why I feel like that was one of my thoughts after it took 2 years for me to start, as I was like, waiting for the phone calls of saying like, this isn't working how I thought it was. And like that phone call never came. So that was one of those deciding factors. I still didn't even really understand it in the beginning, but I was like, I'll figure it out. And so I just signed on the dotted line and funded it. And I have learned as I've gone through.
And I think that's one of the most remarkable things. Even, and I often go on Reddit or I'll go on and Google, like, trying to say who's, out there talking trash, who's saying this isn't working. Yeah. And it doesn't exist outside of maybe people that don't even know who we are, that just from our outside looking in, just, making false statements. But I've never had a client complain or say, this doesn't work the way that I was told, or you told me it was going to do this and it didn't. I've never heard that.
Someone who isn't doing it who's saying that type of thing.
I don't know if it's not luck, because I don't believe in luck, but I mean, we've been in a period where dividends have gone up. So matter of fact, everything we showed clients 10 years ago, 7 years ago, 5 years ago is understated. They've actually done better than what we showed them, because of the dividends increasing. So that's always really powerful.
Yeah, I think that's actually my case too. I'm pretty sure like at some point it was like I should have this much cash value, and I had more than I had originally thought. Is there anything that you wish that people would understand that I could help break down in my understanding?
Yeah, I just wish they understood how simple it is to change your finances and how simple it is to get started. I think a lot of times people just put these fake walls and these fake obstacles in front of the actual desired outcome. A lot of people talk about what they want. They talk about the goals and the things they want to accomplish, and they talk about their dreams, but they do very little to actually take that first step into accomplishing that. Now, I know your first step was, you heard me talking about it a lot, 2 years of that, but your first thing was like, well, hey, if I can get all the money back for the vacations that I'm going to take Harper on, then that's a win. And then that has evolved. So yeah, I don't know. What would you say to everybody when it comes down to these obstacles that they put in front of themselves?
It's really like, it is not hard. It's just a decision. It's just like deciding to go for a walk after you eat is healthy for you. You know, there's things that we know to do and we just don't do them. And when we do them, it's like, oh, it's not very hard. It's the same as like procrastinating. You put something off for 8 months and it took you 15 minutes to do. And you're like, why did I put myself through that? It is no different putting your money into a policy than putting your money into a savings account as far as the transfer is concerned. And then there's so much more benefits when you put it into a policy.
And the same thing, you talked about loan repayments. I think that's a big thing people often miss, or they're like, why would I pay interest on my own money? And that's a big misconception. Like, you're not. Like, a bank makes a spread, right? A bank pays you. So people could look at a traditional bank the same way. You put money into a traditional bank, the bank pays you interest, let's call it 3%. I mean, the bank probably doesn't like paying you 3%, but the bank is smart enough to know, okay, if I'm going to pay you 3, I'm going to make a spread and I'm going to charge somebody else 6. And that's exactly how it works in this. It's like the insurance company might charge you 5 or 5.35%, but you're going to use that money to pay off something or buy something that normally would have cost you more. In your case, you were using credit cards to fund your vacation. And credit cards are like 20 to 29% on an average, interest rate. So here, you could take the loan from your own bank, okay, at 5.35 hypothetically, and you could pay off the credit card, which would charge you 29. What is the spread there? And then on top of that, this is what a lot of people miss, is you still got your money in your policy earning a guaranteed interest rate and dividends. So there's that return on top of the spread you just made on the transaction. And that's, I think, what a lot of people miss. They just think that this just costs money and they focus on the cost of the capital, but they fail to realize you're making a spread. I mean, when did you kind of come full circle around to really grasp that concept? Was that difficult?
No, but one way I'm looking at it more now is almost like a mortgage payment, and then how you have equity. Like every mortgage payment you make, there's a little bit of whatever principal and interest, and then a part of it is, builds your equity. I look at the policies now as almost like I'm the home, and because with a home equity, when you move, they kind of break that system because that property's gone and whatever. But it's almost like having you're the home, and you can literally move 1,000 times in your life, but you're just building that equity that never breaks.
I love that.
Yeah, it's really cool.
Human equity, if you will. So what is it that you think holds most people back?
I just think we just all want to everyone's striving to be normal, it feels like, and the normal thing to do is put your money in the bank. And it feels abnormal in a weird way to do something different. Or you feel like you've made bad decisions in the past, so this is another bad decision that you might make. And I do feel like this is not the case. There's only good that can come from this, is how I feel, at least. As a consumer, not an agent, I'm not licensed. I'm a user and a consumer, and of the product, of the process. I've also done infinite banking probably poorly. Like at one point I had my loans out and I didn't really understand the benefit of being an honest banker and paying back your loans. So I've done it both ways, where there's been years where I've had the loan out the whole time and then, paid the whole 5% on the interest. And then I've done it years where I've been actively paying it down so that effectively at the end of the year, I'm paying less in interest. And it all makes sense, as time goes on and as your experience level goes with the policies, but it's not hard. And another thing I learned about just regular traditional banks that I didn't know, and I don't know is that effectively the regular bank can leverage your dollar 10 to 1. Mm-hmm. So I think earlier I said, we've effectively ran our entire salaries through our bank accounts, and that bank has been able to leverage your salary 10 times more than you have. And like, for what? I don't know. Like, it's like, makes me wonder, like, if that's how things get the way that they are, like, in the world, and that if I can just hold back a little bit and put it somewhere else that effectively isn't benefiting the banks or, you know, making the dollar worth less overall. I like that.
I think it's a choice. We have a choice to participate in the traditional system, which benefits the banks and Wall Street and everybody else, and then we get the scraps. Or we can disconnect. It's kind of like the Matrix, red pill or blue pill. We can disconnect and we can become our own bank. We can control our money. We can basically have our money working for us 24/7 instead of having the banks using our money. I mean, it's literally a choice, and people just have to decide what choice they want to make.
Yeah, and right now, with just like the way the economy is, it's obviously a really tough time right now. I do have this naive outlook on life that if we all had more death benefits, that in the future we're making it a better place, because we'll be injecting that economy with, like, you know, as we all drop off like flies. But yeah.
100%. Kind of like the Rockefeller family banking system.
Yeah.
I mean, they just keep getting wealthier and wealthier generation after
we're
generation.
Propping up the future at this point, right?
So in closing, what is the strangest or craziest thing you've used your private banking system for?
I still actually think, like, even though through Private Money Club or through private lending, we've done investments on forklifts, flipping forklifts. I've used my policy dollars towards that, but I've even bought my daughter a go-kart, which I feel like is one of those funny things that I always think of, you know? And I've gone to Disneyland. I have a washer and dryer that I've self-financed, and anything. Like, you really can do anything you can buy on your credit card, you can essentially self-finance through infinite banking. So I would say I think people also are thinking too hard about it. Like, we use our money very effortlessly sometimes, or maybe mindlessly, but you can use your infinite banking dollars for anything.
Yeah, you can. And it's being intentional with your money that really matters as well. But you don't have to think too much about the intention. It's just by being your own bank, you are being intentional. I think that's a unique piece of it. Well, with that being said, this has been awesome. I'm glad we got to recap this after, you know, the last video, which was, you said 4 years ago?
Yeah, and honestly, where the future is going to take me is I will probably have a fourth policy here soon. So I'm here to say, you know, after 5 or 6 years, happy with the first policy that was in that older video, and just still at it as long as I can. And another thing that I appreciate about you bringing even if people are just focused on cash value in banking, there is so much like illness or sickness that people end up with that they weren't anticipating. And I love that we help people get coverage like early on, even if their mindset's on how can I bank on it? You never know when you may or may not be insurable. So it's really awesome that we are helping people get covered when and while they can, so that they don't ever, if they reach that point where they can't get coverage.
Well, what are some of the ways they can learn more about infinite banking and about what you learned?
I would say the YouTube channel, which you're probably watching this right now, is a great place to start. There's a live webinar every single Wednesday. There's a live stream, Just Ask Me Anything, Wednesday afternoons at 4:30 Eastern. You can bring any question, and there's like a Facebook group, there's live virtual events, there's live in-person events sometimes through the Private Money Club. I would say just start learning. Get in the chats of the Zoom webinars and, the YouTube channel and stuff like that. And just, I would say pay attention to the community more so than anybody else. Like, who's actually part of the community? What are they saying? What are they doing? Because they're really successful and they're really amazing.
I love it. And another way too, folks, if any of you are interested in getting started with your own banking system, you can just give us a call, 866-329-BYOB, or be your own banker. Jump on a call with us. It's not a sales call. Let's just learn about what your needs and goals are. Let us help you solve whatever financial problems you might be going through right now. And with that being said, folks, thanks for joining us. Shauna, thank you so very much for sharing your story again, and we'll continue to see that evolution in your journey. And for all of you watching, if you enjoyed this video, check this one out right here, BYO Bank. We'll see you on the next one.